Hello, and welcome to the first episode of Quantbeats, where we dive deep into the world of quantitative finance in a video series hosted by me, Dan Hubscher from Changing Market Strategies, and Radovan Vojtko from Quantbeats. In later episodes, Rado will be interviewing quant fund managers to understand their insights. But for today's episode, we'll learn about Rado's background as a former systematic portfolio manager and how he got to where he is now as founder and CEO of Quantbeats, the Encyclopedia of Quantitative Trading Strategies, a quant research company with a mission to turn financial academic research into a more user-friendly form to help anyone interested in algo or quant trading and systematic investing. Rado, please say hello.
Hello, everybody.
And as co-host of this Quantbeats series, I'll be speaking in my role as managing director and founder of Changing Market Strategies, providing middle market fintech product, service, and data providers with distribution, and helping you, market participants, to discover new innovations and gain collaborative insights about new technologies in quant, crypto, blockchain, AI, and alternative data. With over 20 years working for electronic, algo, and quant trading firms and fintechs, I'm connecting qualified investors, quant and crypto funds, algo and e-traders, and fintech resources to scale and grow. You can think of me as a resource for all things quant. In each episode, former quantitative hedge fund manager and current Quantbeats CEO Radovan Vojtko will interview some of the most brilliant minds in quantitative hedge fund management. In so doing, we will strive to bring you unique opportunities to gain invaluable insights directly from industry leaders, enhancing your understanding of complex quantitative strategies, market dynamics, and the future of algorithmic trading. Whether you're a seasoned investor, an aspiring quant, or just fascinated by the financial markets, this series is your gateway to the cutting-edge world of quantitative finance. So, let's get to Rado. Rado, can you tell us a bit about your career? What was your first job in finance, and what was the first job that you could call algorithmic or quant?
So actually, my first job in finance was when I was trading myself individually as individual investor. So it was before I started to work for any hedge fund or any fund or anything like that. So I started as most of the other guys trading from my room. And I was reading any book at that moment that I could about trading, about investing, about asset allocation and stuff like that. But after a while, I realized that, there are a lot of the things in the books, but only thing how I can learn more is to try to find employment in a proper institution. So that was my first real job. So I was looking for an institution. I found a job in Tatra Asset Management, which is the biggest asset management company in Slovak Republic. I started as a middle office manager, so I was calculating duration of the portfolio and implied yield and stuff like that. And I moved in a company ladder, and I moved on a position of portfolio manager. And I was still reading the books, and then I realized that you can learn a lot from the books, but the problem with the books is that the book has 300 pages, and there are like one or two good ideas. So I gradually moved to research and research papers because they are shorter than book. And
better signal to noise ratio, is it?
Yeah, exactly, and better signal to noise ratio. So I started to read a lot of the papers, a lot of the quantitative algorithmic papers. Then I realized that after I read 30 or 50 papers, I do not remember what's written in the first one. So I started to make myself notes. So what's in a paper, what's the strategy, what's the idea, what's the backtest period, what is the performance, what is the strategy simplified and explained in some simple English. So what should I buy, what should I sell, when should I buy it, when should I sell it, etc., etc. Yeah. And that was the beginning of the Quantbeats. Quantbeats was born because it helped me a lot in the job of portfolio manager. So I personally gained a lot by writing the notes, looking for ideas, and mixing those ideas together. And when I had a lot of those notes, then I showed it to my friend, and he said, "Yeah, that's a good idea, and you are probably not the only one who is experiencing the problem with ideas for quantitative strategies, and maybe we can use your notes and build a product." So that was how the Quantbeats was born.
Good. So we'll get to the product in a minute, but let's fill in some context for not everyone knows. At the time that you were there, how big was Tatra in terms of AUM, and how much money were you running in your portfolios?
Yeah, so Tatra had around 2.5 billions of euros, and so it was managed in around 25 funds. I personally manage 7 of them, plus or minus. They were the smaller funds because I mean the biggest fund were mostly the fixed income, so I was not managing the fixed income. I was managing the asset allocation funds or funds that were mostly dealing with global tactical asset allocation strategies, managed futures and stuff like that. In total, it was like 300 to 400 millions of euros in all those 7 funds.
Got it. Okay. So you're in Europe at a fairly large asset manager running strategies, a number of different quantitative trading strategies and systematic strategies. So to give people a bit more context, what would you say is the difference between quant and algo?
I mean, yeah, people very often interchange one with another. For me, the quant is any strategy that's systematic in nature. It doesn't have to be strategy that's automated in a way that it executes trades automatically. So, I mean, the quant strategy is a strategy for which you build a hypothesis, you downloaded the data, you tested the strategy on the data, so you run a backtest. And I mean, in this case, that's the quant strategy. It's made on some numbers. It's based on a statistic. And you can move from quant to algo when you take the strategy and you build a code that strategy trades automatically. So in this case, then that's algo strategy. So I would say that the algo is like the subset of the quant strategy, because you can have like significantly more quant strategies that are traded by hand, so by spreadsheet at the end of the day, or you do not need to even have a spreadsheet. You can do the trades by your own. But I mean, the algo strategies are the strategies that are executed by computer. So
right. So it's the distinction of a what and a how. Exactly. Right. And there's quant strategies that may or may not be algorithmic, and there's algorithmic strategies that may or may not be quantitative, I think.
Yeah, you are right. At the end, you are right.
Yeah. Okay. And how did you get bitten by the quant bug?
So there are like 2 main reasons. The first one is that the Tatra was driven by quants, and so it means we were a systematic manager. So it was like natural to do what the company is doing. And another one is that it fits my personality. I like the math. I like the history. So I mean, I personally prefer to download the data and play with the data and backtest and try to understand the data. For me, it's a preferred way how to analyze markets. I do not like to read the news and wait what the Fed just said or will say, or try to guess. I mean, what will be said on some earnings call or whatever, like, or something like that. So I mean, I'm the data guy. So for me, the quant and systematic strategies is something that's natural to me. So that's the reason.
Yeah. Yeah, and I know you're not a Fed watcher, and there are Fed watchers all over the world. For people who are wondering why would somebody from Europe care about what's going on at the Fed, the U.S. Fed, but as a friend of mine from Australia once said, when the United States sneezes, the world catches a cold.
Yeah, yes, yes, you are right. You're right, but I mean, for me, it means that I want to have data about what Fed said in the past over the last 20 years and build some statistic and stuff like that. So it's still, I mean, closer to the mathematics, but at the end, I actually do not care a lot about how it was said or.
Yeah, exactly.
So I care more about data.
In a way, it's the same information, but used in a different way, much more systematically, much more number driven.
Yeah.
All right. Exactly. So you told us about the spark of inspiration that led to Quantpedia, but looking back now, and I guess 2015 is when Quantpedia started. Is that right? Yeah. So looking back at that period, did Quantpedia become what you thought it was going to be when you started?
So, I mean, the Quantpedia actually started in 2011, but it was very like small side project. So, I mean, at the time I had idea that once it can be like actual company, because I saw people around me who were trying to start a company, so they were running a startup. And at the time there was a startup culture in Slovak Republic. So I had like idea that yeah, maybe once it will be like a proper big company. For first few years it was growing very slowly. Yeah, we had some interest in our product, but it was very, very small. It really started to grow probably in 2018, because in 2015 I left the data asset management and I started to pay attention to Quantpedia in full time, because I saw that it's not possible to grow the company without that. And it started to pay off after 3 or 4 years. So in 2018-19, we actually became a proper company with a significant number of coders and researchers, etc., etc. So
Yeah, and that's about when you and I met as well.
Yeah,
about that same
plus or
period of time.
minus.
Yeah, plus or minus. All right, so let's start to set up the context for the people that we're going to interview in the episodes coming up, and kind of let the audience wear their perspective and how your experience managing portfolios before and running Quantpedia now facilitates that. Just speaking about what Quantpedia does day in and day out, how many algo trading strategy papers do you read every week, every month, every year, and how many does the Quantpedia team read?
1 million pages of papers, probably more than 1 million pages. So it's, I don't know, something between 10,000 or 20,000 papers. I mean, when I'm saying that I read so many papers, doesn't mean that I read all 100 pages. I mean, word by word. I saw at least 20,000 papers. I read significant part of, I mean, at least 20,000 papers or even more. We are adding around 150 papers with the strategy every year, plus or minus. But to get to 150 strategies per year, we need to read 20 to 40 times more or 50 times more. So close to 10,000 papers. It's not just me who is reading them. I have a team at the moment. So it's distributed among multiple people. So that's it. So plus or minus 10,000 a year. And from that 10,000, we have like 150 strategies in a database.
Yeah. Okay. Manner of speaking in the practitioner's form in your portal. Can you give me, like, in just a sentence or two, how do customers of Quantpedia use the portal to gain the knowledge that you guys have all put in there?
Yeah. So they are mainly using it as a source of inspiration. So that's, I would say, case study for 80% of our customers. So most of our customers are professionals who are already running portfolios, running trading strategies, and they are looking for new strategies that they can implement that are less correlated to the strategies that they already have, or they are looking for a way how to improve the strategy they already have. So that's like most of the cases. So we are a source of inspiration, because the way how the Quantpedia is structured, you can find very quickly the idea that fits into your structure. I mean, into your fund or into your portfolio. So that's the way. That's the reason why they use Quantpedia, because it's significantly easier to go through Quantpedia to screen for the strategies, to review the backtests, review the codes, review the equity curves, review the statistics, to actually go to the internet and to read, I don't know, 10 papers, and each paper is 100 pages long. So, I mean, it's significantly easier to go to Quantpedia, because you can screen a lot of the ideas. You can narrow down those ideas into those 5 papers that are interesting for you, and you can then read properly and deeply just those 5 papers, and you can get to those 5 papers faster than try to Google them. So that's
right. And the database probably represents the breadth of what's out there in terms of academic research. I'm supposing that as we roll on more quantitative fund managers onto later episodes of Quantbeats for you to interview, that you're going to be hard pressed to see a strategy from them that at a high level you haven't seen or heard of before.
That's true, because I mean, a lot of the strategies are described in academic research, but I mean, one of my colleagues from Tatra in the past said that the devil is hidden in the detail, and he's right in my opinion. So there can be a lot of the papers that describe some styles or some strategies, but very often a lot of the quantitative managers, they have some secret sauce in a way how they actually run the strategy, how it's implemented, and how it's executed. I mean, the trading execution is very, very crucial. So yeah, you may be right that I will know a lot of the strategies and I will know what they are talking about. But for me, it will be very interesting to interview those managers, because I mean, just from the discussion, because we are doing a research on our own. I mean, the Quantpedia, we are not just summarizing the papers, we are publishing our own papers. So I'm always looking for ideas. I mean, which data set to use, which methodology and stuff like that. So
yeah, so it's those unique insights from those managers that we're going to see, that we're really after. We'll see what they can tell us. And that's what everybody here wants to hear too. You know, what do these people have to say that brings some new insight to the table? So last Quantpedia question before we turn to those managers. If you had to choose one insight that stands out from your 10 plus years of compiling the library of algo and quant strategies, what would it be?
It's very hard to pick the one. I would say there are like two that I would like to mention in this video. The first one is that the trading execution is extremely important. So you can have a great strategy on paper, you can have a great strategy even when you try to incorporate all of the bid-ask spreads and fees that you have to pay to your brokerage, etc., etc. But I mean, at the end, you need to run the strategy in the actual market, and then you see if it works or not. And the execution of the strategy is extremely, extremely important, and it's very often neglected by quants. So that's the insight one. And the second insight is about how to find new strategies, and I very, very like to find inspiration in one asset class and then to transfer that inspiration or idea into another asset class. I mean, that's like one of the best ways how to come up with the original ideas. So to find an idea in one space of the market, like, I don't know, equities, and try to use that idea and draw some conclusions and find like similar trading setup or similar trading strategy in, I don't know, crypto or a market which is less efficient, and it works very well. So if there is something that I can recommend how to build the better strategies, that's the one advice I would give anybody. So
yeah. So I think both of those ring true. As we say here, success is 1% inspiration, 99% perspiration. So those both roll up to that. Okay. So in the last few minutes here, let's just set up the Quantbeats video series and tell people what's coming up. So in the episodes to come, Rado, you're going to be interviewing a number of quantitative hedge fund managers across a range of strategies: quant equity, market neutral, quant macro, different asset classes, quant crypto, maybe even different fund structures. What kind of questions are you going to be asking them? What can the audience expect to learn from the discussions with those managers that you're going to have over time?
I mean, I will try to ask them a lot of the questions. I do not expect they will tell us everything. Because I mean, at the end, I mean, they are competing against each other. But I will try to ask them the questions that help us to see a little into their kitchen. So I mean, how they build the strategies, how they come up with ideas for the new strategies. And I mean, that's like the thing that's most interesting for me. So when you have like simple strategy, how do you improve that simple strategy so that you can increase the Sharpe ratio of it, you can decrease the drawdown of that strategy. etc., etc. So how do you mix up multiple strategies when you have multiple strategies running in one portfolio? Some of the details that can help, I mean, to all of us to gain more knowledge and be better at what we do.
Yeah, so kind of getting in under the covers on the R&D process,
Yeah,
how the
exactly.
strategy is developed, where do the ideas come from, and of course, all the little niggling implementation details that everyone forgets about that are so important.
Exactly.
Yeah, so we'll talk about research, we'll be talking about deployment, execution, a little bit of sales, but yeah, heavy on the R&D, good for the analysts. Okay. What else? What else are we going to cover with them? Data sets, data sources.
Yeah, definitely. So data sets, data sources, methodologies. I have a plan to prepare some, I would say, like tailored questions for each manager that will be different from manager to manager.
Yeah.
It really depends. I mean, there are other things that you will ask somebody who is running the crypto strategy and somebody who is running the fixed income strategy. So because those are different markets and there are different sets of questions and interesting questions that you can ask each of them, and they are different from each other.
Yeah. So there's a lot of content for people to consume in the world. One of the things I don't want to do is kind of repeat what else is out there and give people a little bit more depth. And at times it might get a little bit nerdy, but I think people really want to know the advantages and disadvantages at a high level of strategies that are truly differentiated. So I don't think we're going to mince any words. You know, if people are talking about market neutral, well, all right, fine. Market neutral how? Beta neutral or dollar neutral? Or, you know, if it's macro, well, systematic macro or discretionary, how many asset classes? You know, are we talking about individual instrument selection or just broad asset classes? Like, you know, how do you do what you do? And why do we care? I think that's the level of detail that we want to get to.
Exactly. And why do you do it the way how you do it? I mean, so why is the reason why you choose your option from all of the other options that are there?
That's right.
Because there are always a lot of the options when you build a strategy. And what is interesting to know is what was the thought process behind the individual way how the strategy is built at the end.
Yep. Very good. Okay. Well, we're almost out of time, but not quite there. In the last couple of minutes, is there anything that you wanted to ask me?
There's a tough question, but what I would like to ask is what you would like to learn from those guys we will be interviewing? What are the topics that are the most interesting for you?
Yeah. Something I was thinking about this morning was, you know, after 20 years of being in this industry, one of the things that fascinated me the most is business processes, plural, of a trade. How does the money flow from beginning to end, from one counterparty to the next? And how ideas like straight through processing aren't. I like watching innovations. I like watching how people take the existing processes that we have in our industry and break them. So I'll be looking for some of the innovative things that people have come up with. What are some of the new ideas? What are the things that people say that's impossible? That's not a thing. That doesn't exist. And kind of try to pull out, you know, some of those insights. You know, as I said before, we want to get into some of the details, and I want to see everything from how these fund managers sell and market themselves towards investors, down all the way to market structure details. How do they deal with market structure? Do they deal with market microstructure? Are we taking advantage of different order types to optimize a few bips here or there to increase performance? Like, what are the things that really count? Is it the big ideas, the world-changing stuff, the innovative things, or is it just grinding it out next to the coal face and getting all the details right? And what are the details that you have to optimize? You know, those the kind of blood, sweat, and tears. That's kind of what I want to know about. So we'll be talking about everything from sales and marketing to R&D to pre-trade analysis, trade execution, post-trade, and why the heck is the market the way it is today? You know, some of those insights.
I'm glad that I will be doing those interviews with you. Because I mean, it complements very nicely the questions that I would like to ask. Because I mean, what you are just talking about, those are the things that I know are important, but they are not on top of my list. So when we will be asking those questions, it will be very interesting because we will be, I mean, asking the question from all of the directions. So that's great.
Well, maybe I'll go broad and you can go deep, but I'll let you have the floor most of the time. I'm just here to facilitate. But that's great. I think we're getting towards the end, so let's call it quits for today. Thank you, Rado, very much. And for all of you watching, don't forget to like, comment, and subscribe to the Quantbeats channel. Come back for episode number 2, where we will interview our first Quant Manager guest. You can contact us at any time for questions about Rado or about our guests as we roll through the episodes. Just note, please, that any questions regarding investment offerings will be deferred to an email follow-up for compliance purposes, as these videos are not intended to be about investment offerings. But that said, we hope you enjoy the content coming up, and that you learn a lot. Thanks for joining, and have a quant day.
Bye-bye.